There are several ways to invest in real estate with little or no money, including wholesaling. This involves finding a motivated seller, then finding a buyer and arranging the sale. Wholesaling in real estate is a strategy where an investor, the wholesaler, enters into a contract to purchase a property, and then assigns that contract to another investor, the end buyer, before closing on the property themselves. The wholesaler makes a profit by charging a markup, or assignment fee, to the end buyer for finding and securing the property. Wholesaling is a popular strategy for new investors because it requires little capital and no experience in rehabbing or managing properties. The wholesaler typically finds properties that are below market value, negotiates a purchase contract, and then assigns that contract to an end buyer who will close on the property and complete any necessary repairs or renovations. Here are the general steps in wholesaling. Finding a property. The wholesaler finds a property that is undervalued and in need of repairs. Negotiating a contract. The wholesaler negotiates a purchase contract with the seller, usually at a discounted price. Assigning the contract. The wholesaler assigns the contract to an end buyer, usually at a markup, and the end buyer takes over the contract and closes on the property, collecting the assignment fee. The wholesaler receives the assignment fee from the end buyer at closing. It's important to note that wholesaling requires a strong understanding of the local real estate market and the legal requirements for assignments, as it can vary by state. Additionally, wholesaling is not suitable for everyone, and it is important to understand the risks and responsibilities before getting into it. The investor makes a profit by charging a fee for finding and connecting the buyer and seller. Lease options. This involves finding a property owner who is willing to let an investor lease the property with an option to buy at a later date. The investor can then sublet the property to a tenant and use the rental income to purchase the property in the future. Partnering. This involves finding a partner who has the money to invest in a property, while the investor provides the expertise and manages the property. House hacking. This involves living in a multi-unit property and renting out the other units to tenants. This can help the investor cover their living expenses and mortgage payments. Hard money loans. This involves borrowing money from a private lender, typically at a higher interest rate than a traditional mortgage. Keep in mind that while these methods can be used to invest in real estate with little or no money, they often come with higher risks and require a good deal of knowledge, experience and hard work. It's always a good idea to consult with a professional before making any investment decisions.